Welcome to the Bullish Money YouTube channel. Folks, we have some breaking news. I know it's going to sound like a conspiracy theory. It is a conspiracy theory, but I want to lay out some facts with you guys and then have you guys make up your own mind. But what I found today with this breaking news, I just couldn't help but look into it, and it just looks really shady. So as many of you know by now, Aubrey McClendon, who is the founder and former CEO of Chesapeake Energy, was killed in a car accident off a rural stretch of highway in Oklahoma City, just one day after an indictment for conspiracy charges, which are in relation to collusion in awarding lucrative natural gas bids. Now, Chesapeake is the second largest U.S. producer of natural gas, and McClendon was a key player in the shale gas revolution. Now, I would argue that this is in and of itself a conspiracy because look at the favorable timing. You couldn't make this stuff up. Literally one day after a federal indictment, Mr. McClendon is, he's no longer with us. And you hate to be cynical, but this also puts to rest a potentially litigious and very expensive issue. The people that are going to be hurting are the attorneys who are going to charge big time bucks to have this go to court and all the the shenanigans that occur in the legal field. Well, that source of income is now gone. That is not favorable to the attorneys, but very much favorable to Chesapeake, whose fundamentals of the financial status of Chesapeake is just a gaping wound. It is an absolute disaster. Now, on the day of his death, CHK stock shot up nearly 30% on an intraday basis, and it continued to move higher after his death was publicly announced. Get this. This is the biggest intraday move since July of 2002. And the buying volume, meaning the volume that occurred when there was more bullish activity than bearish activity, this is a multi-year record. 76 million shares traded hands. That's, again, we haven't seen that for several years on a bullish intraday. Now, the institutional ownership, the ownership of CHK stock by the big Wall Street fund managers was near all-time records in the months leading up to McClendon's death. So there's an incentive here. Why is Wall Street buying up these shares when CHK has been pretty much drowning over recent years, especially in light of the energy market collapse? And then you look at the insider ownership. These are ownership of CHK shares by the company's own executive management team. Insider ownership for Chesapeake has been historically very low. And nevertheless, in the past several years, that ownership, the insider ownership, has been steadily rising. Now get this, about 30 days before McClendon's death, there was a 16% increase in insider ownership. This is something that you got to key in on. A 16% increase in insider ownership 30 days before McClendon's death. Now, this is significant because since October of 2011, insider ownership has only increased an average of 0.4%. Really, on a month-to-month basis, the insider ownership for CHK stock doesn't really change that much. Sometimes when it does change, you'll see a 3% move here, a 3% move there. But you don't see a double-digit percentage move. This is almost 20%. 20% just prior to McClendon's death? I don't know. Now here's the kicker. Here's where it gets really interesting. If that wasn't interesting enough, this is where it gets interesting. Almost half of the float, that means the shares outstanding, is held short. Now that means that traders are betting against CHK stock by selling borrowed shares and then later profiting from the difference between the initial sale price and the lowered premium. But here, where you have a 30% move on an intraday basis, that short position is costing big time money. Because again, you're taking a bet against CHK stock. If CHK stock moved down 30%, the bears will profit. But in this case, CHK stock suddenly jumped up 30%. That means if you're betting against it, you are hurting big time. Now, those who are avid shorts, those who are determined to hold on to the short position, they'll ride it out. But there's going to be, as in every trade, weak hands and strong hands. If the strong hands are going to hold out because they have the resources to pay the margins to stay in the position, well, the weaker hands, maybe they don't have that many resources, because remember, when you're shorting a stock, you have unlimited liability, theoretically speaking. So if you have this unlimited liability and you don't have necessarily the resources to hold that short position, you want to get out. Well, the only way to get out of a short position is to cover it. That means you have to buy back those borrowed shares, but you're going to buy them back at a higher premium. And by default, the act of buying back those shares, guess what? That makes CHK stock move higher in the financial markets. So it's interesting that you have insider ownership and institutional ownership moving up. And in the case of insider ownership, moving up pretty dramatically just a few days before McClendon's death. They knew something. If an investigator looked at this, they'll say, hey, you guys knew something. You guys knew something was up because you increased your long position pretty dramatically, causing those that have a massive short position to now cover their risk. And by covering the risk, that makes the markets, the CHK stock in the markets move higher. Therefore, it benefited those who started buying up these shares because now they're profiting like crazy. And they're going to continue to profit like crazy because almost half of the float is held short. That means there's a lot of cushion. That's a large pool when almost half of your outstanding shares are held short, and you got to assume that a good chunk of those short positions are being held by weaker hands. That they're not going to stay in that position forever. That's a lot of profit that's suddenly going to come into those that, for the insiders and the institutional guys that fortuitously bought at pretty much exactly the right time. And you have a former CEO that was indicted on these charges, these collusion charges, and he's gone, and that takes away a lot of attention, a lot of legal attention. You don't have to pay those attorney fees. It's a big boost because there's so many ongoing liabilities with Chesapeake. A lot of that has kind of shifted away. The attention has now been diverted. And of course, it's a car accident. It's a car accident in a rural stretch of highway. Very few witnesses, It's just like, geez, Louise. And, it's funny, listening to the press conference that the Oklahoma City Police Department gave, they pretty much insinuated that this was a cut and dry sort of deal, that they implied that this was suicide. And, they said, well, we're going to do an investigation. It'll take about 2 weeks. But, we feel that, this is a pretty black and white issue. And he pretty much slammed into the wall. He didn't take any corrective action driving wise. And, it does, we're not gonna say suicide, but it sort of looks like suicide. So, we think we got this handled, and yeah, forget the fact that this guy was a major player in the shale gas revolution, and shale gas was something that theoretically could have made America energy independent, and that was a big time rival to, Saudi Arabian oil. Come on now. I mean, this stuff. I mean, there's so much incentive in wanting to clean up some of this mess, so to speak. And I gotta tell you, I mean, this is just crazy. I know the mainstream media is gonna poo-poo this issue, but my goodness, this is something. I think this is something. And if you guys, please feel free to comment your thoughts, your opinions. Please feel free to share this video. I think we got them. I think we got them here. This is we caught them. The conspirators involved in this, they think they pulled a quick one, but I don't think so. I mean, they left a big time paper trail that looks very, very suspicious.